Stocks finished the week on a very sour note. Yen is approaching multi-decade low as dollar continues to rally. Gold has an enormous positive candle, and oil also rallied today on wider war fears in the Middle East. All this and more in today's edition of MasterChartsTrading.com. Market recap for Friday, October 13th, 2023. As always, please don't forget to hit the like button, subscribe to the channel, share this video, and click on the bell to receive my updates on the YouTube. All of these actions is what keeps this channel going. Thank you very much for them. If you're a subscriber, stay tuned. There will be a separate video where we'll cover all of these various securities, such as various ETFs like ARK Innovation, Staples, S&P 500, world ETFs like emerging markets, Switzerland, Indonesia, as well as large cap stocks like UnitedHealth, Johnson & Johnson, as well as various small cap and speculative securities like Palantir, Upwork, and Wayfair. Also, gold miners are rallying, and we will cover them in the members only video. To sign up, go to MasterChartsTrading.com, sign up for one of the products. I have 3 products: trading indicators, newsletters, and both of them together. Let's get started. On this chart, as always, I am using my MasterChartsTrading.com price action indicators. You can see them on this chart, this green, blue, red, and yellow line. We are currently looking at S&P 500, and this is a daily chart. Daily meaning it's 1 day's worth of activity in each of the candlesticks. So, a few days ago, the stock price, the price came down almost. We almost touched this blue support resistance line, and last week basically, and I was like, yeah, it's possible that this is it, but in my experience, usually when we break below this green line, and especially below this previous lows, like we did on the 21st of September here, we will eventually touch this blue line. We can also look at the moving average. For example, here's a 200-day exponential moving average. We did touch that already. However, it feels like it's not complete, to tell you the truth. So ideally, we should see a touch of this blue line. Let me see what it looks like, because Dow Jones actually already no, it hasn't. Let me look at the actual index of Dow Jones, and there it is. So see how we came down below this blue line. So looks like we might be coming down more for the general stock market. Notice also the way the indicators are curving up. So now the blue line was, a few days ago it was at 41.88, and now it is at 42.43. So it's making it easier now for the price action to touch the blue support resistance line. At that point, we will say, okay, for sure we're oversold, for sure we're likely to rally. Now, if you haven't heard, we have a new war going on in Middle East, of all the places, a extremely volatile place for various reasons. It has a history going back literally hundreds of years, if not thousands. Unfortunately, the cycles of violence continue. There is no real resolution yet. It's possible that this time it will be somehow resolved, but what there is fears of is, of course, of a wider conflict, especially if it spirals out of control. Places like Lebanon, Egypt, Syria, Iran get involved, then their allies come to their side, and the United States gathers its allies and starts a world war. So this scenario is not out of the question, and I'm not terribly comfortable with what's going on, obviously, and when we get to gold, I will show you why many people are also not very comfortable with this at all. So me personally, I would like to have, I do have like a few days to a few weeks worth of food. I have camping gear, I have supplies that I need to last in case there's a severe disruption of some sort. We had during the pandemic time, during the beginning of the pandemic, we had something of this nature, but it was more like a prelude or a beginning of a very easy kind of thing. Nothing really was long-term sold out, and nothing really was destroyed. However, if a true war breaks out, this type of scenario where there are shortages, there are disruptions, this could happen in the civilized society, civilized world, the Western world as well. Now, going back to the stock market, like I said, I think we will most likely see a further pullback. We can extend the stocks or rather the indicators into the future. Now, definitely we're lining up. So notice how this light blue line is lining up with this darker blue line, and so we just started lining up. That means that this future projection is quite valid. Notice how the indicators are still curving up. So two ways of looking at this is that means one way is saying that most likely we will try to bottom around the blue line, and the blue line is really close, so we're not going to get very deep pullback. Another way of looking at this is to look at how wide they are apart. So notice this bright yellow line to this bright green line. They are apart about 740 points, 20%. Okay. Now notice into the future. Here's 8th of November of 2023 right here. Notice that these lines are now apart 500 points, only 14%. So this means that the price will have an easier time of getting to the yellow line. The yellow line would imply a bear market for stocks. Okay, so right this instant, we're not, yet entertaining a possibility of a bear market. However, the more narrow these indicators become, the closer they come together, the more likely it is that price will continue significantly lower and break into a new bear market or a downtrend. Not yet, however, with all the crazy stuff going on in the world, you just kind of have to at least have a possibility in your mind that this might happen. And so when we get to the yellow line, or if we get to the yellow line, this is my line in the sand. This is where I start getting out of the stock positions and no longer opening any long positions. Once again, we are not there yet, so let's watch the next few weeks into early November. They're going to be quite interesting. Interesting. It's one of those Chinese proverbs. May you live in an interesting times. They're going to be, I think, important because once again the indicators are curving up. We will see if we can hold this line again. Once again, ideally we should hold this line and just rally to 52-week highs. So far, I'm moderately optimistic, but the way things are spiraling in Israel and elsewhere, anything can happen. So looking at a completely different security I don't normally look at, but it's very interesting to look at it. It's Japanese yen futures on tradingyou.com. It's 6J1 exclamation point. And let's look at it on the weekly chart. So weekly meaning that each candlestick is 1 week's worth of activity. And here it is. If you're trading with my indicators, use change the length to 52 where I'm hovering. Okay. if you're trading on a weekly chart. When you go to daily chart, make sure to go back to 250. Okay. So on the weekly chart, looking at this chart, notice that we are in a downtrend. Okay. How do I know we're in a downtrend? We were in a very briefly an uptrend where I'm hovering on 20th of March. We kind of broke into it and we never really made any headway. But here's the breakdown on June 20th, the week of June 20th. That's the new beginning of a new downtrend. And now we're actually approaching fresh lows. So this lows for the Japanese yen, I'll explain why it's important, because Japanese yen, you can think about inverse to gold basically. So the Japanese yen now, this is a very long-term chart. This is a weekly chart of Japanese yen going back to 1989. Okay, so notice here on the left side the 1990, the low from the 1990. Okay, right there. And then there is this low from 1998, which we actually broke down below in the beginning of this year. So this low on October, actually last year, end of last year, in October 22, 2022, we broke down below the 1998 low. Okay, and now once again we're approaching those new lows, and so if the Japanese yen breaks below this 2022 October lows, it would by extension break down to multi-decade low. In fact, it will be approaching a low not seen since 1990. That's 10, 20, 30 some years. Okay, 33 years. So looking at Japanese yen, we can think about gold. If Japanese yen is weak, that means dollar is strong, because these are expressed in dollars. So also we can look at the dollar itself. This is a dollar currency index. It's composed of multiple currencies like euro, yen, British pound, and some other ones. So looking at this dollar currency index, notice how we just continued higher from this low in July of this year, and we just kept pushing higher. And I thought we're done right there on the 3rd of October, but I don't think we're yet done. And then I can also project the indicators into the future. Notice what's happening to the indicators. So as I was explaining with S&P 500, we're S&P 500, the price is above the blue line, and the indicators were curving up towards it, so it makes it easier for the indicator, for the price to continue into the bear market. Now we're looking at the opposite case, where we're seeing the indicators curve down towards the price action, from price actions coming up from below. Notice that we're very close to the blue line. If we break above the blue line, it would imply that there's the blue line right there. So we just need a very small move really to get above the blue line. It could literally happen next week. If the dollar breaks above this level, it would imply a new uptrend for dollar. Okay, now normally in normal times, gold and dollar move in the opposite direction. Okay, so let's look at gold, and here's gold. So gold has started its uptrend, where I'm hovering, in January of this year. Okay, and up arrows are where would be a good buy points. In fact, we were buying it here. Now the latest sell-off was quite significant into October here, and dollar, by extension, dollar was rallying. Okay, so the million-dollar question is, will dollar break into a new uptrend, and will this weigh on gold, or are we decoupling? Is gold going to be doing something on its own? It's not normal, but it's not unusual either. There are time periods. I'm going to show you. For example, what happens when gold this is gold, and we can look at correlation to dollar, US dollar. Okay, so notice that occasionally, usually or quite often, see, you can see that the correlation is negative, meaning if dollar goes up, gold goes down. But sometimes we get positive correlation or like neutral correlation. Okay, so on occasion we see dollar and gold decouple, and they're doing their own thing. Okay, we can also do look at yen, and I think XJY, that's the yen. And actually, if you look at yen, this is Japanese yen, and its correlation with gold, it actually has a slightly better correlation. So if yen is going up, then I'm sorry, this is correlation between there, it should be gold, like that, yeah. So correlation between yen and gold is also not ideal, to tell you the truth, but it's something to keep in mind, that right now we have a weird time period where both gold and dollar could be actually heading higher. All right, this is most likely due to the fact that we have a second war breaking out. So gold in times of war is a kind of hedge against being freaked out, and I think it's a good idea to own gold. How do you own gold? You can do... Okay, so one way of looking at this is to think about, let's say there is true anarchy, and let's say there is very little law and order. How would you use gold to purchase things? For example, you want, bread, and you have a bunch of gold coins, right? So each gold coin is like, it's like $1,000, almost $2,000, right? Bread doesn't cost $2,000. So one way of doing it is to have gold chains. If you have a gold chain, or a few of them, you can cut a piece of gold chain, go to a market and say, okay, I have this much gold, can you give me a little bit of bread? Okay, that might be one way of thinking about it. So how do you own gold is entirely up to you, but that's one way of doing it, and I think it's actually quite reasonable. So looking at this chart, gold is in an uptrend. We at Master Charts Trading are long gold. I have gold miners in my portfolio. I'm holding some gold miners. So I think gold could appreciate further, and this candle is enormous. I mean, let's look at the weekly candle. I mean, it's gigantic, really. Look at this candle. This is a very bullish candle. I mean, it's slightly smaller than this one from March, but it is giant also, nevertheless. So new record high for gold cannot be ruled out. This is right now what we're looking at is a triple top for gold. So if we break out above this triple top, we can see a significantly high, strong move higher. I already forecast this before. If we break above this previous record highs for gold, I think it can go to 2,500. So another 20% above the previous highs. Not to freak anybody out, but sometimes it's good to know those things. Let's move on to oil. Oil obviously is also an important commodity because we still run on oil. Unfortunately, many wars are fought because of oil, and the sooner we get to the fusion power, the sooner hopefully this will be behind us. But for now, our world is still dependent on oil. And at this point, we're looking at breakout of oil, where I'm hovering on the 31st of August, and move higher, and a move back towards the blue support resistance line. So we actually have, already a signal to buy. There's the signal. This signal was actually sent to my subscribers, but the latest one I did not send out. And actually today we had obviously a clear, huge candlestick above the blue line. Definitely a signal, definitely something that, it's a bullish signal. So I would be buying it. Ideally, I would be buying it at like $84, $83, $84. But I think this high from 26th of September is $94 or so. I think it might be taken out pretty soon, and I think we might spike towards $100, possibly higher. What do you guys think? Make a comment. Do you think gold and oil will continue higher? What do you think about the events in the Middle East, in Israel and Gaza? It's all quite sad, to tell you the truth, but it is what it is, and we have to deal with it. So that's it for this week's recap. Head over to MasterChartsTrading.com, sign up for one of the products. Again, I have trading indicators, so this lines on the chart. You can trade pretty much anything under the sun using them. Newsletter, so I send out daily alerts about various securities we trade. For example, this week we will send out, I send out various alerts about the securities, various ETFs, Treasury bonds, various stocks such as Cloudflare, Asana, CarGurus, as well as gold related such as Goldfields, Royal Gold, and Wheaton Precious Metals. If you want to get both of the indicators and trading newsletter, then sign up for that at $59.95 per month. I think it's a great deal. And that's it for this week. Please let me know what you think. Make a comment, hit the like buttons, subscribe to the channel, and share this video with others. Once again, thank you for watching, and have another great trading week. Bye-bye.